afternoon, possibly good morning, depending on where you're listening to us from today. Welcome to another great educational webinar that we have here at Advanta IRA. We're having a guest on today that we have had on a couple times over the last year or a couple years to talk really about what the projections look like for precious metals and gold for 2024. So very happy to have Greg Allen of Allenhouse Metals back with us today. So as we go through the presentation today, if you have any questions for Greg or possibly myself, make sure you type those into the question box on your screen. We'll make sure we get those questions answered prior to the end of the webinar, or either Greg or myself might reach out to you afterwards. My name is Scott Maurer. I'm the Vice President of Sales here at Advanta IRA. I've been with the company for a number of years now. By degree, I'm a licensed attorney, although I don't do any legal work for Advanta clients. But my contact information is here on the slide. So if you do have any questions about using your IRA to invest in precious metals, maybe the rules involved, things of that nature, which depositories we work with, certainly reach out to me. My phone number is here, my email as well. And also you can just simply visit our website at advantaira.com to learn more about self-direction in general, maybe more specifically as well about using your retirement funds to invest in precious metals. Just a quick disclaimer, the webinars that we provide are strictly for educational purposes only. At Advanta IRA, we do not provide any investment advice. We don't endorse any particular products or investment providers. If you do need outside parties, we're happy to provide you with the name of an attorney, a CPA, maybe a financial advisor who can help you and give you that type of guidance that you might be looking for. And for those of you if you're new to Advanta IRA, you're new to self-direction, just a quick note about our company in general. We've been around for almost 20 years, providing self-directed IRA services, helping people invest into different types of assets using retirement funds than mutual funds or stocks. And we certainly have had a number of people over the years and maybe even over the last couple of years investing into precious metals, which is why we brought Greg on today to help share his knowledge as well. We try to separate ourselves in two ways with between our competitors in the industry. One way is really our focus on our customer service. We try to put a concierge level of service where we have somebody, an account manager or someone like myself that will help you through every step of the process when you're looking to make an investment, looking to open up an account and get those questions answered for you and give you those points of direct points of contact. And we also, through our educational offerings, is our other differentiator. Really, the webinars, we have 1 or 2 webinars a week. Today's webinar is really just an extension of what we do on an ongoing basis here at Advanta IRA, providing great guests, great topics, great insight into different areas of our industry and other different types of investment industries as well. So all of the webinars that we hold, including today's, are warehoused and recorded and kept on our YouTube page. You can link to that to our main site. Anyone listening live to the event, you're going to get a recording via email as well after the event is over. If you want to go back and re-listen to it or maybe share it with a friend. So if you ever missed a webinar, just know that you can go to our YouTube page within a day or so of the live event and you'll have it right then and there. So we're talking today about precious metals investments in an IRA account. It's really important to know kind of what metals are permitted. So if you're listening to the call saying, hey, I might want to use part of my portfolio to invest in precious metals, there are certain considerations, things you have to keep in mind. Well, number one, the IRS has certain defined fineness requirements. If you're looking to buy gold or silver, the metals typically need to be at least 99.5% pure gold or pure silver. And just because a coin was minted by a government, whether it's the U.S. or other governments, doesn't automatically make it qualified to be held in an IRA. That's a great question when you're talking with your dealers or you're talking to someone like Greg, who's going to know which metals, which coins, which bars are going to qualify to be held inside of an IRA account. Just because it's just because it's pure gold. If the value of the coin, though, is because it's a rare collectible type of gold coin, that might make it ineligible to be held inside of an IRA account. So it's really important that you know that the dealer you're working with as well is familiar with the rules and which coins will qualify to be held inside of an IRA account. Additionally, the IRS rules do not allow you as the IRA owner to have physical possession of any metals held inside of your IRA. So you must work with a third-party depository institution. Advanta maintains a relationship with, I believe, almost up to 8 different depositories for you to choose from to hold the metals inside of your precious metals. But again, you personally are not able to hold those, and you cannot use a single member LLC, what they call in the industry a checkbook control IRA or checkbook control LLC, to get around that requirement. That was a court case that came out a couple of years ago where a taxpayer decided to set up an LLC to buy their metals through, which would then, in theory, for them, allow them to hold their metals in a safe and their own residence. And the IRS tax court says that is still a prohibited transaction. You cannot have physical possession. So very important that you have a third-party depository. And just another note, even though coins can be used as legal currency, maybe the wisdom of that, you might say otherwise, but you can't not use metals as a contribution to your IRA. So if you held, say, 2 gold coins, you have 2 personal gold coins, you'd like to contribute those to your IRA account, just put them into your IRA as part of your annual contribution, that is not permitted. The IRS does require all contributions be made in cash, so you would put cash into the IRA and then use the IRA to buy those metals. You cannot simply contribute the metals into the IRA account as well. So again, in general, the metals that are allowed in IRA are typically gold, silver, platinum, and palladium. There are certain weighted U.S. gold coins and silver coins that are minted by the Treasury that are permitted. Again, the other countries that are permitted, Australia, Canada, and Great Britain, they're similar weighted gold and silver coins. There are also certain bullion bars and rounds that will meet the fineness requirements, and then therefore can be held inside of an IRA. Again, what you're trying to avoid when you're investing in precious metals with your IRA is anything that could be deemed a rare or collectible coin, where the value of the coin is maybe in excess of what market value would be because it's rare or it's unique or it's different. That's where you're going to possibly fall into disfavor with the IRS and have them disqualify that particular investment. Also, I've had people ask over the years called Dory bars, which is like 85 or 90%, maybe less gold. Again, it has to meet certain fineness requirements to be able to be held inside an IRA account. And again, at Advanta, just last note, we could have several different depository institutions, or if you have another depository you prefer, we can certainly look into holding metals there as well. So just wanted to give a little bit of overview on gold and silver inside of an IRA account. Obviously, we hold this for a number of clients. So if you have any questions on whether your IRA would qualify, the type of retirement account, what that process looks like from starting an account with us and moving the funds over, I'm more than happy to talk with you offline and go through that process with you and answer those questions. Now, again, as we go through the presentation today, please don't hesitate to put your questions in the chat box on the screen. I'll make sure to get those addressed during the presentation today. But I did want to allocate most of the time today to our guest speaker, Greg Allen. He's founded Allenhouse Metals in 2017. They offer the purchase and sale of different solutions for precious metals. We've had him on a couple times here at Advanta. He gives great information, great insight to where maybe the economy is heading, where the markets are heading, and what impact that's going to have on precious metals as well. You can connect with Greg at the website there to get some more information. I'm going to change the controls over to Greg now.
Thanks for having us back on here. I know these webinars are fantastic just from the point of view of obtaining information and seeing what's going on. And without further ado, I'll hop right into it, but I just want to reiterate what Scott said. Don't feel that you're interrupting. You don't have to wait until the end for questions. There's a few things we might go over that, you might not understand. There are no stupid questions. Please don't hesitate to ask questions, and we'll make sure we get to all of them.
Speaking of which, Greg, before you start, we did have a question come up right away. I'll just get it knocked out if we want to beforehand. Someone just asked, what are the typical costs on a self-directed metals IRA? From the Advanta perspective, we have a $50 account opening fee. There's a $95 transaction fee when someone is buying the metals and actually going through the purchase price. And in general, our annual fee is a flat $250 a year for whatever amount of different coins that we hold. It's just a flat fee if you have a couple of 1 ounce coins, a couple of, whether it's gold or silver in a mixture, it's a flat $250 a year charge that we have, and then you would have the depository cost, which I believe starts at about $100 a year, depending on your depository. So again, happy to take that question in a little more detail and walk through those fees again. But great first question we had there. But Greg, you're right. If people you have questions, somebody else likely has that other question that is listening. So just get those typed into the box. But Greg, I'll turn everything over to you.
For sure. The other thing I want to mention with the fees, I know we have this in the last slide in terms of, call into Allenhouse Metals to see your discount today. But one thing I will say, and I know you've probably seen this, Scott, is typically for Advanta customers, when it comes to their metals purchase, what we try to do is discount at least enough to cover the first year to 2 year of fees with Advanta for them. It's something, as Scott was saying, the fees are low enough that it's not a barrier to entry, but we always try to help out where we can with that. And just getting into this, I think a big thing for us is ultimately, we understand there's no one size fits all approach to investing or buying gold and silver, right? And so when it comes down to purchasing gold and silver, we want to understand your objectives and your risk tolerance, and whether that's protection, capital appreciation. Really what we want to do is help you create a tailor-made portfolio that meets those needs. So moving forward here, you'll see Dillon Gage. Dillon Gage we are a registered dealer of this company. They're an authorized purchaser for the United States Mint, the Canadian Mint, the Perth Mint, virtually every government mint around the world. We ship all of our product from their warehouse in Dallas, Texas. And they are responsible for about $1.5 billion worth of gold, silver, platinum, and palladium on a monthly basis. So moving forward here, IDS is one of the depositories that's approved by Advanta. IDS is a wholly owned subsidiary of Dillon Gage. The reason why we recommend that a lot of our customers use IDS Texas specifically is because the vault for the depository is actually located in the same building as the warehouse where we ship inventory from. So when it comes to buying and selling precious metals, transactions happen quicker than anywhere else. There's no need to ship it. There's no need for any of the additional stuff that you would think of. And to give you an idea, it's as simple as filling out 2 forms, which we can help you with on the part of Advanta, and money moves same week. In some cases, money can move within 24 hours. And just another little tidbit, I mentioned this because Scott and I were talking about it. This morning, I actually attended an audit of a vault at IDS with an Advanta client. So if you purchase gold or silver or platinum in your IRA, you actually are allowed to go to the vault in person, and they will allow you to see and audit all of the metal that you hold in your IRA. It's a really interesting experience, and I know that the client this morning really enjoyed it, so I mentioned it out there because I don't know if anyone else is into it, but I figured, it might get some interest. The other thing to note about IDS is they're COMEX certified, ICE certified, and they also hold a London Bullion Market Association, or LBMA, certificate. This is the gold standard, pardon the pun. When you talk about precious metals, it is the top credential you could have. Now, moving on here to the next slide. Just give me 1 second here, folks. There we go. So a big thing when we look at precious metals in general, right? We're looking at finding a safe haven, right? At the end of the day, precious metals typically soar in value when stocks plunge and when there's geopolitical uncertainty. But aside from that, and what you're going to see today is on a consistent basis, precious metals like gold, like silver, outperform markets like equities and real estate. And so I think one of the big things to look at is not only are precious metals a safe haven, but it's something that you can put in your portfolio that can be a consistent earner for you. So as we move forward, the big thing with precious metals, right? They're guaranteed to rise with the cost of living over time. And so all that means is, let's say 100 years ago, you could buy a house for $10,000 and you bought gold with that $10,000. And let's say that same house is $500,000 today. That gold that you bought for $10,000 100 years ago will buy you that house for $500,000 today. And it'll buy you that house, let's say it's $5 million in another 100 years. Same thing. The other thing I wanted to talk about, a lot of people look at, well, how do I buy precious metals? Should I buy an ETF like SLV or GLD, or should I buy the physical product? One major thing that I would say, the main reason people would look to buy the ETF as opposed to the physical product is liquidity. You have no issues as to liquidity when buying physical metal with us. We move out of cash into metal and metal into cash instantly. And additionally, one thing that happened over the last 3 years is major ETFs that people would invest in, like GLD and SLV, have actually changed their prospectus. On page 7, I believe, they no longer back those funds with purchases of physical metal. And furthermore, they stipulated that they can liquidate the fund and give you liquidation value without investor approval. Now, the big reason that they changed this is because of the supply and demand quotient. The supply and demand quotient is way out of whack with gold and silver, being that there is more demand on an annual basis than there is supply. And so for the ETF's sake, they don't buy it anymore because they have a hard time getting their hands on the amount of metal that they would need. The issue becomes is if the fund is no longer backed by physical metal, then it's really going up and down with volume and as units of the fund are purchased. So I just want to draw everybody's attention here to the most recent dot plot that we have from the Federal Reserve. Now, every Fed meeting that comes along, every person that has a vote in the Federal Open Markets Committee gets handed a sheet with a dot plot on it. And what these dots are is their predictions of where they believe interest rates should go. Okay? On here, you'll see on the legend, the blue dots reflect the decision makers as of September 2023. The purple dots reflect the predictions as of December 2023. Now, if you can see my mouse, what you'll notice, this line going straight down here is their predictions in September for 2024, for rates in 2024. This line here in purple shows their prediction for rates in 2024 as of December. And then these two columns are the same, but for 2025. What you'll notice is prior to the December meeting, the Fed governors believed that rates should be at or above 5% for the remainder of 2024. However, or rather the entire of 2024. However, if we look at December right here, which is after policymakers said they believe they reached their terminal rate, meaning they've reached the peak interest rates, they're not raising anymore, they now seem to agree that they see rates in the range of 4.5% to 4.75%. The specific press release released by the Fed is showing 4.6%. Okay, and if we look over to 2025, we see it settling somewhere in the 3.5% to 4% range. Okay, now a major thing about this is that, remember, the Fed has said all along, higher for longer. And the reason that I bring this up is because we see a lot of major banks stating that the Fed should cut and will cut interest rates by 125 to 150 basis points this year, which would put it at 3%. Okay. The Fed does not stray from their forward guidance. Okay. The main reason that we're looking at this right now is because we know what the Fed is about to do with interest rates is going to have a major effect on the US dollar. Now, why do we care about the US dollar? Well, the big reason is the US dollar is the #1 indicator for gold and silver. Okay, they share an inverse relationship. If the dollar loses value, gold and silver go up in value. If the dollar gains value, gold and silver go down in value. So right now, based on the dot plots, we can expect 3 rate cuts in 2024. We're looking for a total of 75 basis points, or 0.75%, which will bring rates into a range of 4.5 to 4.75%, exactly how we saw on the dot plot. Now, moving forward, I guess the big question is, like I just said, how will this affect the dollar? And just before I get into the dollar, one thing, and I want to mention this to everyone, I mention a lot about forward guidance from the Fed. There's a fantastic tool that everybody tuning in here can get. All you have to do is Google it. It's called CME Fed Watch Tool. Okay, this tool will show you the percentage chance of a change of interest rates by the meeting for the year. Okay, and so if we look at this right now, this tool is currently showing the chance of a 25 to 50 basis point cut of being 40.6% in May. But realistically, it's showing that we can expect the first rate cut in June this year. The meeting is on June the 12th. It's showing an 82% chance of a rate cut in June. Okay, so again, if anyone's curious, it's CME Fed Watch Tool. Now, what I've got here on the chart, and I apologize, I know it's a little bit blurry, but I wanted to get it as big as possible. This is a chart of the US dollar. It is a chart that dates back 3 years, okay? Now, when we look at this chart, what you're going to notice is, and this is true over the last 20 years, the US dollar has fluctuated between a strong level of support at 72 on the index since 2008, roughly. That's been the major line of support, and a strong line of resistance at 104 on the index as the Fed has tightened or loosened monetary policy. Typically, the Fed's cycles have been between 0 and 2.5% with rates in 2015 and 2018. Over the last 3 years, the US dollar, and you'll see on this chart, it's fluctuated where you'll see my mouse over here at a low of 89 on the index. And it's peaked here in 2022 at a high of 114 on the index. And the high of 114 on the index is as a consequence of the Fed raising interest rates to 5.5% this time instead of 2.5%, which they did in 15 and 18. The main thing here is the Fed has attempted to stabilize the US dollar, but simultaneously they've diluted the value of the dollar. Right? It's no secret the Fed has injected $10 trillion in stimulus, or rather we could say they printed $10 trillion while raising interest rates. So the big thing here in looking at the dollar, we can see it's already come down from its high at 114. It's dipped down to a low of 102, and it's bouncing in a range between 102 and 104 right now. The major thing that we're looking at is what's to come for the dollar here. Well, rate cuts are pending. As I just said, the CME Fed Watch tool is showing us the biggest chance is that the first rate cut's happening in June, right? We believe that based on these rate cuts, not only is the dollar going to return to 89 on the index, but additionally, as the Fed unwinds its $10 trillion balance sheet, most analysts predict the dollar could return to 72 on the index. The major thing, and I do want to show this on charts and later slides, 72 on the index for the US dollar is a level that would propel silver to $50 an ounce. It's also a level that would propel gold to $2,500 an ounce. Now, take what I'm saying with a grain of salt in the sense, I'm not saying this is happening overnight, right? Everybody's heard the stories of silver's going to 50. However, what I am saying is the fact of the matter is the dollar has the potential here to drop by 30%. The reason it has the potential to drop by 30% is the Fed is not only going to be cutting rates, but they are going to be unwinding this $10 trillion balance sheet. The only thing that has kept the dollar above water is the fact that the Fed has continued to increase interest rates. Once the Fed begins to cut, the dollar will break through this level of support that we've seen established at 102. And once it's below 102, all bets are off in terms of a level of support. So moving on here, one thing that I wanted to reference, and this is a serious projection, Gregory Shearer, he is the head of base and precious metal strategy for JP Morgan. Not only did JP Morgan cite, and it's something you can see on the charts, gold profited by 13% last year, but they believe, based on the dollar chart that we just saw and policy from the Fed with declining interest rates, that gold will hit $2,300 by Q4 of this year, and that it will average $2,175 on the year. The reason that this is so significant is the previous all-time high for gold, which we saw just a few months ago, is only $2,153. And that's very profound. The reason I mention this is everyone on here either will know or can look it up and they'll find out right away. $2,000 an ounce for gold used to be the ceiling, the line of resistance that we couldn't get through. $2,000 has now become the new floor. We have been trading over $2,000 an ounce, except for one day, blink of an eye here, for over 60 days now. So $2,000 has really become the new floor. Now, also, I do want to mention, aside from the fact that Chase's predictions are based on interest rate cuts and dollar devaluation, it's important to also note that we do have every factor you could want when it comes to purchasing precious metals. There's geopolitical tensions right now. We have multiple wars around the world. And the big thing is demand is also being bolstered for gold, specifically with central banks. Central banks purchased a record amount of gold in 2023. So moving into this chart here, what you'll see on the chart is I basically laid out a chart since 2000 to present day, okay? Now, when we're looking at this chart here, a big thing that we need to note is you will see a steady incline from 2000 until 2011, and then we see a cup form here and a handle, okay? Now, what you're seeing in these red dots is each point leading up that we hit a new record high, okay? But more significantly, what we use a cup and handle for is as an analytical tool. The depth of the cup here indicates the amount of future profit that we could see. Now, when we're looking at this cup, if you follow to the bottom of the cup, right here where my mouse is, you'll see there's a $900 cup. Okay, so keep in mind, this is a cup that's happened over a 10-year period. So what this is saying is that we have the potential in the gold market to see a $900 move upwards, which would put us in the $2,900 an ounce range. Now, I am more in line with Chase in terms of the short term. We believe that $2,300 is on the table this year, which again would be a 15% increase in the price of gold. But additionally, Chase, as well as us, believes that this bullish momentum will continue into 2025 as well. One thing I would like to move forward here is, what about silver, right? When we look at gold, we tend to look at silver as well because the two trade in tandem. And what I mean by that is, gold is typically the first mover, right? Silver tends to follow. So when we look at silver, and you'll note from the headline right here, there is much more profit potential in silver right now than there is in gold. Now, why is that? Well, first off, Shearer and JP Morgan believe that silver will average $30 an ounce in Q4. Okay, that's not just hitting $30, they think that will be the average. Okay, that's a almost 30.5% gain. Okay, the major thing is that silver benefits from something that gold doesn't. It is the second most useful commodity in the world. Okay, it has a massive industrial demand. Silver is used for everything you could think of that's electronic. And even further to this point, Elon Musk owns silver mines because Tesla requires silver to be put in every battery that they create, every solar panel that you can think of, cell phones, anything uses electronics uses silver in it. And additionally, the one reason why you'll see silver projected to move quicker than gold is because of the gold to silver ratio, right? The gold to silver ratio right now is sitting in the neighborhood of 87 to 88 to 1, when traditionally this ratio is used to being between 40 and 60 to 1. It was at 40 to 1 for the 20th century. It's been more like 60 to 1 for the 21st century. And I'll get into that in a following slide. But again, like I was saying, the primary reason for these forecasts is falling yields, falling US dollar, and interest rate cuts. So moving into this chart here, we see, and this is labeled quite boldly, this chart is showing silver since 2020. Okay, so now just about 4 years that we've got on here. The major thing that we've seen here is a longer term head and shoulders pattern. Okay, it's also referred to as to what we're seeing on the chart here as a triple bottom. And it exists for the dollar as well, by the way, in the form of a triple top. A triple top is extremely bearish. A triple bottom, like we see here in silver, is extremely bullish long term. So most markets move up or down on double tops or double bottoms because the shoulders that you see here, they present in a case analysis that the market is going to break out significantly in one way or another. Now, the one thing I want to mention is, additionally to these, if we look in the corner of the chart, you're going to see silver has consolidated in a tighter and tighter range. If I had a drawing tool, I could draw almost a pennant pattern right here. Okay, now what happens with a pennant pattern? Think of it like a coil, okay, or a spring rather. What happens is you get the highs and lows of the market get tighter and tighter together, just like you're squishing together a spring as tight as you can. Now, when you get to a point here where they're as tight as can be, they slingshot one way or another, okay? Now, what we can tell here, based on the US dollar, based on interest rates, and based on global markets as they are right now, the slingshot movement here is going to be to the upside. Now, one thing I also want to mention here is you'll see on the chart it shows a target of $35. Chase is showing an average price of $30 in Q4. And the question is, why is that? The main reason is going to be, and this will become more clear on the next slide, the gold to silver ratio. Okay, If anyone has their phone on them right now and has a calculator, what I'd like you to do is simply take $2,300 gold, put $2,300 into your calculator, divide $2,300 by 65, being 65 to 1, which still will show silver as undervalued, and you reach $35 an ounce. The primary reason, aside from Head and Shoulders, cup and handles, all of this, that you are seeing a $35 price target on this slide is due to the gold to silver ratio. Now, just a little bit more in depth on this. This chart showing the gold to silver ratio for over 100 years, okay? It is the #1 tool to determine what you should invest in, whether that be gold or silver. Okay, traditionally, that ratio is 40 to 1 in the 20th century. And also, it's been 60 to 1 for the 21st century. But what we know is anytime that ratio is wider than 80 to 1, not only does silver outrun gold, but silver typically outruns gold 4.5 to 1 on a percentage basis. In layman's term, meaning that when the ratio is wider than 80 to 1, silver typically gains 4.5% for every 1% that gold gains. And so if we can just, again, I don't know if anyone has their calculators out on their phone, but it's an instructive exercise, and I'd like everyone, if you can, to do it. If we look at the price of gold this morning, right? The price of gold as it sits currently, or this afternoon, I should say, is $2,027 an ounce melt price, okay? The melt price of silver is $23.12. So if you type in 2,027 into your calculator, and then you divide that by $23.12, you get 87.67 to 1. Okay, that means that silver not only is wider than 80 to 1, but furthermore, this is not a normal occurrence. Silver has only been wider than 80 to 1. You could count on both your hands in history. It doesn't happen very often. And when it does, we always do much better with silver than we do with gold. Now, another thing I wanted to mention, just based off this gold to silver ratio, even if gold does not move a penny from where it's at now, because remember, gold is the first mover, silver follows. Based on the gold to silver ratio, if we take the price of gold today, 2027, and we divide it by the average gold to silver ratio for the 21st century, which is 60 to 1. So if we divide it by 60, it gives us a silver price of $33.73. So what I mean to say by this is, yes, there's upward momentum in gold. Gold's always safe, it's steady Eddie. There's also much more upward movement in silver. And if we look at it right now, gold doesn't need to move another penny for people to make money with silver. So moving on to this next slide, it's something I just wanted to throw in there. I think it's interesting from an investor's point of view. This is the total market cap of the gold market right now, because I think a lot of people hear about investing in physical gold and silver and think it's A, not the norm, or B, that it's not a major market. If we look at this right now, the gold market itself is $13.7 trillion. The silver market's $1.3 trillion. Between the gold and silver markets, not including platinum and palladium, we're looking at a $15 trillion market cap. That on its own is 5 times the size of Apple. So these are major, major markets. And yes, the biggest players in these markets are not only institutions, but they're central banks. Now, moving on, I just wanted to touch on this because one question that we get a lot is, I'm considering diversifying. I want to take a look at gold and silver, but how much should I allocate? What you're seeing in front of you right now is a pie chart that was put together by CPM Group. Okay, this is from a 50-year study, okay, from 1968 until the end of 2018. What they established is that investors who were the most successful over a 50-year period, in fact, those investors over that 50-year period averaged almost 8% per year in returns, had 25% of their allocation in precious metals, and the remaining 75%, when they say stocks, they're really referring, in this study, it was the S&P 500, and then as well as cash and T-bills. Now, the aggressive investor that you'll see the pie chart in here, it's showing 10% allocated to precious metals. What CPM Group for this study defined an aggressive investor as is someone who had 5 or more streams of income. And then lastly, I'm sure a lot of people here have heard about Ray Dalio. Ray Dalio is the founder of Bridgewater Capital, who recently retired from his role there, but largest hedge fund in the world. He himself has 7.5% of his money in gold. So major players here, and it's a good thing to consider when rebalancing. One thing I wanted to mention that I didn't get a chance to put a chart in, but when we talk about rebalancing, one of the big things we look at is what risk do you face elsewhere? Now, one thing that JP Morgan Chase has come out with in the last few months is that their projections for the S&P and the stock market as a whole for the year are quite grim. The S&P, I know I had mentioned double top earlier in terms of a chart tool. The S&P has formed a double top. Currently, we have the S&P at a record high of 5,000 points. Right now, though, this double top and JP Morgan's projections are saying that for this year, at the very least, they see the S&P settling at $4,000 to $4,200. Now, that's a haircut of over 20% from where it is today. I mention this to everybody here because if there was a time you were going to look at rebalancing, we're sitting here right before interest rate cuts, and we're also sitting at the top of the S&P. It couldn't be a better time to take a look at your portfolio with this. Now, this as well is from that same CPM Group study. And I just want to explain it because it can be a little confusing here. What this is showing, this percentage on the graph, is the percentage of a portfolio allocated to gold, okay? And what they've determined, and you saw in the pie chart before, it was 25 to 30%. The reason they've determined that is you'll see investors with 25 to 30% over that 50-year period average between 7.75 and roughly just under 8% returns. Now, you'll see that investors who had 70% in their portfolio of gold averaged over 9%. And you might say, well, then why wouldn't they just say, hey, there's more returns, you should have 70% or more in gold? The reason that they haven't said that is we follow what's called the risk curve down here. Now, this risk curve is not referring to risk that you face when you're investing in gold and silver. It's referring to the risk that you face of missing out on other more speculative opportunities that could make you larger shares of profit in a short period of time. So ultimately, what this is showing is that they've determined ultimately the ideal allocation is 25 to 30% in precious metals, with the rest of your portfolio consisting of T-bills, cash, or stocks as well, specifically the S&P. Now, one thing I just wanted to mention while we're on this slide, because I know Scott mentioned it as well, is actual products. Like, what product should you be looking into if you're looking to buy gold and silver? One thing that you know, myself and my company as a whole has always tried to stay away from is numismatics. The reason is numismatics tend to carry extremely high premiums that people are convinced they're worth that. The issue is it's not until the investor goes to sell the numismatics that they find out that no one, including the person that sold it to them, is willing to pay the premium that they originally paid on the numismatic coin. Okay. So, what we tend to recommend and what we specialize in are what's called investor bars. Okay. Investor bars are 100-ounce and kilogram bars of silver. We have kilogram and 10-ounce bars of gold and kilogram and 10-ounce bars of platinum. Now, if you're not looking to make a big splash in the pond like that, we do offer all of these products, even down to the 1/10-ounce denomination. However, our major concern is helping people buy metal at the lowest possible premium on the way in and buy a product that will maintain that premium so when they sell, they're not taking a haircut. Okay. Now, for people that like coins, because I know Scott was mentioning some coins as well, you have to be very, very careful when you're getting into coins. First off, collector coins are not allowed in an IRA anyways. But one coin that I am coming around to and we have seen clients buying lately is the gold and silver American Eagle. Now, the reason I mentioned the Eagle, typically this has been one of the highest premium coins you can buy over the last 5 to 6 years. It's also the most well-known coin worldwide, I would argue. These premiums for these coins have come down as much as 70 to 80% in the last 6 months. So the reason I mentioned the Eagles right now, it's a good way to get single ounce denomination coins if you're looking for it. But additionally, if you're looking to speculate a little bit, in the sense, whenever the gold and silver markets move up and we get bandwagon jumpers into the market, the main thing everyone's looking for, because everyone knows what it is an American Eagle coin. And so what we tend to find is as the market shoots up, the premium for Eagles tends to increase. And the reason the premium tends to increase is because it's hard to get your hands on them. So I mention this because it is speculative, and I'm being upfront about that. However, there's a lot of people that are looking at the reduced premiums on Eagles right now, thinking that you can buy them now with a cheap premium. And as the market goes up, not only will you profit because the market's going up, but you could profit twofold in the sense that we get a bump in the premium in Eagles as well. Okay. Now, one thing I do want to mention, just as we move here on to the last slide, is please feel free. The number up there is my direct line, and that is an email that goes directly to me. Just because you call or send an email doesn't mean you're locked into anything. If you have any questions, any concerns, if you need help with another metals position that you have that you can't figure out, don't hesitate to give us a call or shoot us an email. We're happy to help everyone out. And like I said before, not only do we sell it, but we buy it all back, and that's a guarantee. We buy everything back. So last thing I'll say as well, just to reference that question, is I know I mentioned that we do offer a discount, which we do. All Advanta customers that come to us, we offer a discount on all of their purchases. But specifically for your primary purchase, we try to make sure that you won't face any fees for at least the first year to 2 years for your account there. And that pretty much wraps it up for me. Do you have any questions there, Scott, that people have been asking?
Yeah, Greg, I do. The great presentation. Again, very informative as always. So did have a couple questions come in. I think a couple of them for me, a couple of them for you while you're going through your material. So one question someone asked early on, we were talking about vaulting. IDS vaults exist in both Delaware and Texas. I know the answer is yes to that. I know you're out by the Texas one right now. But they do. Yeah, IDS has vaults in both Delaware and Texas. So someone asked this other question. I'll handle is how quick RM.
One sec,
Oh, sure.
Scott,
Go ahead,
just
Greg.
before you go into the other, I just want to mention, so IDS, Texas and Delaware, owned by the same company. They have depositories other places like Canada as well, which aren't relevant to our conversation now. The one thing I would say to you, the primary reason we see clients move metal into IDS Delaware as opposed to IDS Texas is because of the inheritance tax laws in Delaware. These depositories run the exact same. You have the same privileges in both places, like you can do an in-person audit like I was speaking on. But the main difference between Texas and Delaware, and the main reason you'll see people have an account in Delaware and not Texas, other than the fact that they live in Delaware, would be the fact that Delaware has more favorable inheritance tax laws.
Gotcha. Okay. Another question, and somebody asked how RMDs would be handled. And for those somewhat new to IRAs or maybe not at that age yet, an RMD is a required minimum distribution that with any taxable IRAs, your traditional IRAs, your SEP IRAs, when you reach age 73, you're required to take a minimum distribution from your account. The IRS expects you to take some kind of taxable event, whether it's you withdraw cash or withdraw assets, starting at age 73. So an RMD, when you hold precious metals, could be satisfied by either selling the metals back to someone like Greg and you're receiving cash to your IRA and then taking the cash out of your account, or you can, and we've had many clients do this, simply take your RMD from your metals. Figure out your RMD, say for this year is $10,000, so you take out $10,000 worth of metals from your account. You can certainly satisfy your RMD by taking the required distribution of the actual metals themselves. So to answer that question, it can be handled really either sell it to cash or you simply take the distribution of the metals.
And just to get into a bit of detail on that, Scott, if you choose to sell the metal, we do buy it back. All we have to do is fill out a couple of Advanta forms for the required minimum distribution, and I also submit an invoice to Advanta. Once that's submitted, we move the metal out of your vault into the warehouse and money changes hands. A lot of our clients really like the idea of taking physical possession. And like Scott said, you can do that. If at any time you want to take a distribution of metal, the fee from IDS, I don't know about other depositories, but for IDS, it's $25 to $35, and they will FedEx 48-hour insured shipping right to your front door. So within 2 days, you'd get it.
Yep, thanks for that information. So another question asked, somebody said the presentation will be sent to us by email, correct? Yes, the recording is going to be emailed out to everyone, even if you're participating live. So a couple other questions, I think, Greg, for you. Someone asked, can you invest outside of the IRA, which I guess both of us could answer yes. You can certainly buy and hold precious metals, whether it's an IRA or not. But the same person asked a question, what is the minimum investment? I don't know if that's something that, there's no minimum I can tell them on an IRA side, but on your side, I don't know if you have a minimum investment amount.
No, like to give you an idea, we have absolutely no minimum, to a point where, like, in cash accounts, like we even have clients that have subscriptions where they buy $100 a month. There is no minimum whatsoever. Just because you're ready to invest $1 million doesn't mean your investment's more important than someone's who's looking to invest $1,000. So no, there's no minimum whatsoever.
Gotcha. And I don't know the answer to this, Greg. Maybe you do. Someone asked do we know if there's any depositories, institutions in New Jersey? I'm sure maybe there is one. I'm not sure if we work with one or not, but I didn't know if you knew offhand. Any depositories in the state of New Jersey?
Off the top of my head, I don't know any in New Jersey. One that I have experience working with, and I know is not far from New Jersey, is Brinks. Brinks actually has a depository under JFK. And that, not that it's in New Jersey, but it would be as close to a depository in New Jersey that I know of.
Sure. So here's a question I can answer very easily, but I was going to follow it up with one a little bit of my own, Greg, if you don't mind. The question someone asked, can we put silver and gold in the same IRA? And the answer is absolutely yes, you can. We have clients who hold both gold and silver within their same IRA account. But I guess the question I was going to ask, do you have you mentioned kind of the allocation percentages that Ray Dalio and other people would have put out there. Is that
Yeah.
gold or silver specific, or do you if someone came to you and said, "Hey, I have $50,000 or $100,000 to invest," do you say, "Hey, there's a certain allocation you should put in silver or gold or a mixture of both"?
So, and I'm really happy you asked that, Scott, because that's a great question. First off, diversification is always the key to success, right? That goes for diversifying into metals, but it also goes to diversifying within precious metals. Now, when we're talking about gold and silver, and specifically with those allocations are a mix of gold and silver. Typically, how we determine this allocation is based on the person. First off, if you are not interested in terms of capital appreciation and you just want to preserve, you want steady Eddie and you want to preserve where you're at, gold's your ticket. Gold is steady Eddie. Silver has more volatility, but tends to have more upwards momentum, as we saw throughout the presentation. Now, when it comes to also looking at the gold to silver ratio, what we look at right now is the ratio is pretty much the widest it's ever been, except for one prior occurrence, which was when the pandemic was declared. So if you're looking at what's the most undervalued metal to buy, it's going to be silver. I would say typically a lot of our clients are allocated heavier to silver with gold in the same account, but heavier on silver right now due to the fact of how undervalued it is. The plan for them is you want to capture as much of the profit as you can in silver. And at that time, you can either swap those profits into gold and preserve them, or if you really are looking at other things, because don't think because you buy metal today, it means you're not going to buy any other investments after. When you've reached your profit potential in it, you could also sell out and use it to fund a real estate investment with Advanta or something of that nature.
Question, let's see, it said, why would investing in bullion offerings, for I guess through you all, be better or more advantageous to other companies offering bullion offerings? So maybe stepping aside from the purchase of coins, any thoughts on that? Let me guess any feedback for that as far as buying bullion through you all through somebody else.
Yeah, that's a good question. I think number one, we have more selection and more inventory than anyone around the country. I just offer the most popular items on my site. But like I said, I'm a registered dealer with Dillon Gage, so we have access to $1.5 billion in inventory a month. A lot of the time when you look at other dealers, they might show a lot of inventory, but when you go on, if you want to buy more than $5,000 or $10,000 of a product, they won't even have inventory and you'll have to pre-order it. Aside from that, we are full service from point A to point B. As you know, Scott, we have a link. We can help you open an IRA for Advanta directly on our website. We'll walk you through the process along with the Advanta account manager and Scott's team. After that, we also help you open your storage account. We handle communications with everyone. So at the end of the day, we're more like your one-stop shop. We're not just a dealer. We're full service. We handle your IRA. We handle your storage. We handle the buys and sells for you. Everything, and including the required minimum distribution. It's something that we take pride in, and I think it's important, right? Service is a big thing, and I think a lot of companies have gotten away from that. So I would say inventory, pricing, and service are really the big ones.
And just so we're almost at the end of our hour, just a couple last quick hitters. Someone asked, does this have sales tax when you buy and sell the metals? I don't know that there is, or it's maybe address that. Someone asked, does this have sales tax applied to it?
Good question. Some states do stipulate that there is a sales tax on numismatic coins. However, if you're buying in an IRA, there's no sales tax. And additionally, we stray away from all products that would be subject to sales tax. And thirdly, if you're buying within an IRA and with Advanta, if you choose to use IDS in Texas or Delaware, those are both states that have absolutely no sales tax for precious metals sales.
Someone asked if I have an account at Advanta already. What's the first step to investing in precious metals in my account? I mean, it's really for that question. Reach out to your account manager here at Advanta, or if you're interested in talking with Greg, obviously reach out to Greg, and he can get in touch with us as well. So the first step really is just to reach out to us and let us know you're looking at investing in precious metals, and we can kind of take it from there. The last question, Greg, and we'll let you go, is do you provide your customers any guidance? I mean, I kind of see from the presentation that you do as far as when it comes to gold and silver allocations, and maybe where do you draw the line at some point, or where you kind of give some basic guidance, or you say, hey, I really think this is what you specifically should be doing, and kind of maybe just a few thoughts on that, and then we'll wrap it up.
So one thing, like technically, I am not a fiduciary. However, we are always there to help people with the analysis and the advice. Our company, as Scott knows, we're a family business. And one thing I'm very lucky to have, I work with my dad. He was a registered stockbroker for over 20 years, as well as now is in the metals business with me. And I mention this because we are always happy to go over charts, go over analysis, and go over the details with anyone. If you ever have questions on what's going on, or you want to help create a strategy for yourself, we are happy to help you do that. And the main thing that we want to be able to do is show you all the information in black and white and let you make an informed decision based on the facts and not emotion, because at the end of the day, that's what's really important. But yes, we'd always be happy to help you out when you're looking to make a decision, whether it be about metals or the like.
All right, great. Thank you again very much. Great, always such great information you bring when you come on board. I'm sure we'll look to have you back later on in the year and kind of see how what you're saying today plays out, and then obviously looking ahead, in the months going forward. So, Greg, thank you very much again for joining us.
Awesome, and thanks again for having me, Scott, and I appreciate. Thank you for everyone for attending.
Yep. Again, yeah. Thanks everybody attending. If you're listening to a recorded version of this, or if you're still on, any questions on the IRA side, please don't hesitate to reach out to me. My information is here on this last slide. So thank you again for everybody for attending.